Certainly an interesting story. I think probably in the main good news for homeowners at the moment. There's or home buyers, I should say. There's a lot to like about the idea of getting involved in the market with lower interest rates and better affordability. So that'll be interesting to work through over the Christmas break and into 2012. But joining me now on the show, Duncan Week of the Thornton Group, Director of the Thornton Group. Duncan, good to have you in.
Thanks, Tim. Good to be here.
Yeah. Perhaps if we can get things started from your point of view, tell us a little bit about yourself, how you perhaps got involved with the Thornton Group and in the industry.
Thornton Group is an investment house here in Adelaide. We manage people's money, and we really become the hub of people's lives, where we help them mitigate their risk, invest their money, and give some good guidance working with people like you on property.
Oh, very good. So before we got started, you were mentioning to me really act for people in all spheres of investment.
Yes.
Property. Tell us a little bit about the different areas.
Well, investment markets are difficult at the best of times, so we need to work with good people. We're involved in the share markets, in funds management business, but also we mitigate people's risk by insuring them appropriately and making sure their tax structures are most effectively put in place.
Okay, and what about any obscure spots where you might have seen people wanting to invest?
Oh, gold. Gold is probably not that obscure. We're a licensed dealer for the Perth Mint, but probably the most unusual investments I've seen people do is in the wine, with particularly Penfolds products, and also that of Rocky O'Callaghan's at Rockfords with their basket press. So they're probably the most unusual I've seen in portfolios.
And all a bit of fun too, I'm sure, along the way.
You've got to enjoy it, don't you?
Yeah. Perhaps a 10-year snapshot of where we've come from, I should say, and where we are now in terms of the financial markets and so forth. Because it's been a bumpy ride, and you were saying earlier also that this year hasn't been a fantastic year. So
yeah, I guess it's the main theme that we discuss is the cycles, that every investment is in a cycle. And if we look back over the last 10 years, as I mentioned to you prior to coming on the show, we looked at the introduction of the GST, and that was supposed to lead to Armageddon in the property market. Well, it didn't. Soon after that, we had the September 11 events, which led to a war. That was supposed to lead to the end of global markets. But as I recall, property markets kicked up soon after that. We had the GFC at the end of 2007 with the demise of Centro, ironically on December the 20th. And in 2008, the markets went into a tailspin again. But then March 2009, we kick up again. So I guess it all depends on what people want to see with their investments, whether they're traders, which our clients are. Our clients are investors, and we look for opportunities. We look to buy when everyone else isn't.
Yeah. It's interesting when you think about all those events, or the 4 events that you've just mentioned. On the back of most of those, when you look back at it, look in the revision mirror, as you said, we did take off pretty quickly again after all of those events, really.
Yeah, I think it's a little bit of a herd mentality, and I'd like to speak to a psychologist on this. People tend to want to buy things when everyone else is buying.
Yes.
Which, if you really think about it, that's probably not the most prudent time. What I've learned is if you buy well, you will make more money, and that's where I see things now. And sure, we can talk about what's happening in Europe, and there's no discounting. It is quite terrible when you see economies such as Greece, lending 160% of their GDP, Italy 120, France is at 90, and to make it all relative, Australia is at about 10.
Yes.
So we're actually geographically in a pretty good place, and our neighbours are the cashed up ones throughout Asia, lending money back into Europe and the US. So we're pretty well placed.
Yes.
And which led to our other conversation about how the media portrays it all.
Well, isn't that always the interesting thing? And you reckon your blood pressure goes up at about 6 o'clock in the morning when you get up and see the first news stories. So, the media certainly plays a part. And
as I mentioned, if you see anything on global markets in the first 3 stories, it's generally going to be a pretty bad day. But if you can see through that, and if you see what your objectives are, and I would imagine housing investment is no different. There are opportunities out there, and how often do you hear someone say, "Gee, you got that at a great price," or "Boy, I wish I'd bought that," or and even if you're buying for your own house and want to upgrade, what better time is there to do it when no one else wants to be in the market?
Well, couldn't agree more. Of course, the other thing that strikes me is that where we perhaps have a small benefit in the residential market is that our clients don't ring every day and say, "Now, what's my house worth today?"
Yes.
Whereas you guys have the share market reports in the paper every day, and the shares have changed value, and I've either made money or I haven't, and all that sort of stuff. So our investors, if you like, in residential property are certainly should be long-term thinking, and I imagine probably that's the advice you'd be giving for most of your investors too.
Oh, most definitely. But the irony is, for the same reason that people are worried about Europe, is probably the reason they should be confident in Australia. And if you're confident in Australia, you should be quite confident in the South Australian market from where we sit.
Yep.
So if you look at our economy is doing particularly well, and I hear 2-speed, 3-speed economy, but that's just the way it's going to be going forward. And that, in a sense, mitigates risk as well, because different sectors do better at different times.
Yep.
But the South Australian economy is looking quite strong. Sure, we're not riding right up there with the peloton. We're not at the front, but we're not dragging behind either.
No, and we're well structured from going away back to cope with difficult times.
We'll harken back to State Bank. That was really our Armageddon back in '91, wasn't it?
Yeah.
And you look at where the economy is now, sure, we're not booming, but then we've never been a boom-bust economy. No. Have we?
And then, well, I guess to bring it forward to the right here and now, talking of BHP, the statistics of the sort of money that's being spent at the moment must bring a warm feeling to those people's hearts at the moment.
It's almost, if you look at BHP, they're going to spend, a lazy $1 billion on feasibility over the next 12 months. Thank goodness the indenture went through Parliament last week. But they will be spending $6 billion a year. $6 billion a year. And to make that real, our economy generates $70 billion worth of something each year.
It's pretty serious. Close to 10% of
our economy is this big hole in the ground.
And they're not even pulling minerals over and above out of it yet.
No.
So it is exciting.
It is, and for every dollar, if you look at what's happened and the government's been very supportive of the mining industry. I think back in 2003 we had 4 mines in the state. I think the number's up around 13 now.
Right.
The government's been very pro, but it's not just putting the hole in the ground as some people would suggest. It's the infrastructure that goes with it. It's the well-being, it's the wealth that's coming into our economy.
And then the spending back into the
into our markets.
Established businesses.
So the knock-on effect is quite enormous, really. But a lot of people are prepared to knock it.
Now we could obviously talk about this bit for quite a lot longer, but we've got some interesting stuff to talk to Cameron about shortly. But in between times, we're going to have a look at our going, gone section.